I just cleared over 400,000 this month from trading options. I'm not here to flex. I'm here to show you exactly how I did it so you can copy me. I'm 34, I trade my own money, no outside funding, no fake screenshots, just execution, edge, and mindset. Let's get into it. Most traders spend all their time looking for the perfect setup, the perfect strategy, and the perfect watch list. The truth is, you need to focus on yourself. Understand what your risk tolerance is. Understand your emotions and how you react to winning and losing. Then build a strategy around that. There's dozens of ways to make money trading. You don't need to trade every single day to be profitable. Let me be blunt. If you're not placing real trades, none of that matters. Paper trading is good for beginners to understand how to enter an order and see how the market moves. But if you want to actually get better, you need to have skin in the game. You need to feel the emotions while in a live trade to gain real experience. An overthinker will find 10 reasons to enter a trade. They'll use 5 different indicators, 20 different trend lines, and end up drawing a painting on their chart before placing a trade. The way I trade, I use simple support and resistance levels coupled with a catalyst to enter a high quality trade. It's that simple. No need to complicate your day. You are fine after reps, not before. You don't need to trade everything. Just find a few tickers you know better than your ex. Focus on a niche, tech, semis, large cap, or growth stocks.
With day trading, you don't need to trade every single sector. You don't need to trade every kind of market. It's really important in the beginning to focus on a specific set of stocks and index. In this case, I'm going to show you guys an example with SPX. For myself, I watch SPX every day and I use it basically as a compass. However SPX moves, it's basically going to give you the overall direction of the stock market. So if you look here on this chart, SPX dipped to about 51.19 last August. And this is a pretty big sell-off when SPX was at about 56.69 at the high in July. It dipped about over 500 points to the lows there. So recently this year, we had a big sell-off with tariffs, right? SPX up here was at 61.47 and eventually it got back down to that August low over there, 51.19. The market did dip below it, right? It went all the way down to 48.35. But during this time period when you're trying to figure out where to trade, this was an important level, right? Retesting that low and then reclaiming it a few days later was your first entry point. If you jumped in calls on April 9th of this year, around 51.19, you could have caught an additional 360, 370 point move the same day. That was the day that Trump announced a 90-day delay in tariffs. So that's one example of trading off a very key support level. These levels, based on daily and weekly charts, are going to present the best opportunities for you to grow your account. And, since we've seen that test there at 5,100 for SPX, we've bounced over 700 points since then. Today's May 12th, and we closed at 58.44 today. You have to understand where the key support levels are and the key resistance levels. These are going to provide the best entries and best exits for your trades.
Patterns repeat themselves year over year, sometimes 5 or 6 times in 1 year. If you can recognize the best setups and patterns, these will produce the most profits. If you don't know how it moves on earnings, you don't know it. Size for zero. Most traders will buy positions instead of 20 to 50% stop loss. When trading weekly options, you will get stopped out 80% of the time. There's never a trade that goes profitable the second you click buy. Volatility, it's part of the market. And if you're not ready for it, it's gonna crush you. Most people, if you buy a $1,000 position, they'll stop out at a 50% loss. The way I trade, I'll size for zero, meaning I'll buy a $500 position and this will account for my max risk and allow me to see the full potential of the trade. I'm not here to scalp pennies. I wait for moments that can make me $10,000 to $30,000 in a day.
I'm gonna go over one more example here with Tesla. If you look at Tesla, I'll give you a very relevant example to recent history here. So Tesla 290 was a big level. If you look from March 27th, right, we got up to 291, rejected there. Even March 25th, we got to 288, which is close enough to 290 where that range is hard to break above. And then after it got to 291 on that March 27th, we saw one final dip down to 214. And a couple weeks later, or even a month later, we tested 291 again, April 28th, April 29th, May 1st, and May 2nd. It wasn't until about May 9th until we finally saw that breakout. This was last week, last Friday, where we saw a gap up in in Tesla and it finally broke out. And today, May 12th, moved all the way to 322. When you see rejections on the daily chart at important levels like 290, that is proven to be a big pivot point now. Once it finally gets through, you're going to see opportunities where option contracts can go 2, 3, 4, even up to upwards of 500%. Wait for important levels when you're trading options. This is when you can catch momentum. You're going to be able to catch option contracts move 2, 3, 4, 500%. So it's really important that you wait for these, because time to trade during consolidation periods is when you get chopped up and you end up giving back all your gains. Another thing is that these patterns repeat themselves over and over, year over year. If you're patient enough and you can wait for these type of moves, this is how you truly grow an account. Leading into the election last year, the presidential election where Trump won, there was about I would say a 6-week consolidation period where the market was a little bit tricky, September all the way into the beginning of November. When you're trading, of course, the technicals are important. You need to know the important support and the important resistance levels to trade off of. But you have to remember that the market moves based on different types of catalysts, whether it's a news event, economic data, or some macro event. In the case of November, it was the presidential election. After November 6th is when I started going into more long positions, trading Tesla, SPX, Nvidia, Meta, and all different types of stocks. I basically caught most of the move here in 1 month, from 5,700 all the way up to about 6,100 in SPX. You can see my P&L here from November 1st until the end of November. I closed out about 720, almost 725,000 in profit. Really important when you're trading. Like I said earlier, you need to wait for momentum. You need to wait for a catalyst that's going to trigger more buyers to step in. You can trade off technicals alone, but it's only half the picture. With day trading, you have to wait for the important data, important events, and then let the market react to it, and then you initiate a trade. Trying to predict too much when day trading, it works in the right environment, and it works, of course, when you're right, but your reaction time, your ability to react when you're day trading, that's how you make money in the long term. So just remember that when you're trading, wait for the reaction and then act and execute.
Tools I use on a daily basis. I use TrendSpider for charting. For trade execution, I like to use Thinkorswim or even E-Trade. Journaling, I do pen and paper. For my routine, I don't touch the market until I've meditated, planned, and reviewed the day yesterday. Your edge is built in the hours no one sees. Want to copy me? Do this first. Study my trades. Build a 5-ticker focused watch list each morning and don't deviate. If you're brand new, place 100 paper trades before you go to real money. Don't just rush into trading. Be patient and learn first. Create a morning system and a shutdown routine. This isn't theory, it's what I do every single day. If you're serious about trading, the money is there, but it won't show up until your discipline does. If you want to see how this really works, links below. No pressure, just truth.